Hello traders, welcome to Investoo.com's How to Trade Binary Options series. In this lesson, I'm going to teach you how to trade binary options with the RSI or Relative Strength Index. What we're going to do is we're going to go through a Euro US dollar 1 hour chart, and we're going to look at both bull and bear setups. So here's the 1 hour Euro US dollar chart, and the first thing you need to know or you need to look for is the market direction. You can see that we are making higher lows and higher highs, which means that we are in an up structure or market is going up. So we are going to look to buy this market, which means that we are only going to look for setups to buy call options. Now, the first thing you need to understand is that when you are looking for setups to buy call options, you are going to be looking at this area of the RSI, which is the oversold area. This means that you are going to buy dips in corrective moves to the downside before price moves up. Okay, now remember that we are trading binary options, so targets really don't matter, and what we need to understand is that we are looking fast reversals for our options to expire in the money. So this is the 1 hour chart. We are going to be looking to trade a 3 to 4 hour expiration option to give our trade some room to breathe and our options to expire in the money. And right here we have the first example. You can see that price dips below the 20 line to oversold territory and then dips back up. When the RSI line does this, we have a signal to buy or to go long. So right here at this level, we buy a call option. Okay, now the exact level where we buy this call option is this level right here. Okay, so let me just put on a black horizontal line as our entry point. And if we are trading a 4 hour expiration option, this would mean that we have to wait for candles. 1, 2, 3, 4 candles. The close of these candles is above our entry point, so this means that we have one winning trade right here. Okay, now we have a second long position that or a second long entry that the RSI gives us when we have a dip below the 20 line on the RSI and then a dip above. So the RSI goes to oversold territory and then dips back above. When the RSI does this, we have a signal to go long again. So let me just use a square or a rectangle to point out the entry area. And if we wait 4 candles, 1, 2, 3, 4 candles, you can see that price is or the closing or the expiration price is way above our entry price. So we have a second winning trade with the RSI. Now price continues to go to the upside, and we don't have we have price going into overbought territory. But remember that because we are in an up move, we are only looking to buy this market. Now right here, guys, is an exact explanation of where we are going to shift and start to look for short opportunities. You can see that price was going up on this up structure. Okay, we were making higher lows and higher highs, and then price breaks with this structure and makes a lower low and a lower high. So right now we are going to focus only on short opportunities or opportunities to buy put options. This means that we are going to look at this area of the RSI, the area above the 80 level, which means that we are going to look for areas where price is overbought, which means that we are going to try to buy the rally or sell the rally when price gets overbought for a continuation to the downside. We have right here another nice entry or another nice RSI entry when we have the RSI going into overbought territory, we have a signal to buy put options at this height. And if we wait 1, 2, 3, 4 candles, you can see that price actually or the expiration price is actually below the entry price, which would mean that we also have another winning position using the RSI. So this is basically what you are going to be doing with the RSI. In an up move, you are going to look to buy the market, which means that you are going to look for oversold opportunities to buy call options. In a down move, you are going to look for overbought opportunities to buy put options. And if price is in a range, you just do the same. You sell at the top of the range at overbought conditions, and you buy at the bottom of the range at oversold conditions.